Thank you very much. I'm very happy that the session attracted apparently so much attention, and I'll briefly introduce myself. My name is Laura Schaffner. I'm Professor of Information Systems at the École de Management Strasbourg, University of Strasbourg, and a non-research fellow at the UC Berkeley Center for Long-Term Cyber Security. Everything that I will be saying today, because I recently joined also one of the largest insurers as head of security strategy and awareness, will be on my own account, following my experience and research that I did as a professor at these two institutions. So I'm really talking here about something that has been important and around for me for really 20 years when I started working as part of my PhD on the interrelationship between information security and business strategy. And if you can imagine, in 2004, the CISOs that I interviewed and that I spoke to were in a very different position than we are today. CISO at the time, in 2004, meant that you were rather seeking management attention to at all receive any budgets that you would have. So they were very interested in learning more on how you can make money on security. But since then, that really changed. I was then, after 2007, working in consulting, doing many projects, and I always saw that it was really a matter of communication between security and management. Security would ultimately get more attention, but it was still very different or very difficult actually to create transparency around security. Now, that was really the reason why, when I went back into academics, that I made this as a center of my research, trying to find a solution for creating transparency, communicating what we do in security to the board, and from the board back to security. And what I would like to present today is the result of that long journey, like over 100 projects I think I did in security, and that finding a solution through the monetary quantification of cybersecurity in the board. Because quite frankly, what it looks like today is a little bit like that still, unfortunately. Now, everybody who's seen the left side here, please can you quickly raise your hand somewhere? Okay. So I think, unfortunately, that's still the case today. Then we have a different problem, which is on the right side here, the red flags that we are having, or that investors see, stakeholders see, when they want to receive more information on cybersecurity on the board. Sometimes they see reduced disclosures. Sometimes they see board lacking competence around the topic of cybersecurity, which is not surprising given that they are not specialists in the area. But what does that lead to is that we do have a rather inconsistent security strategy where before an event, we're fighting for every dime, dollar, euro. And then after the security breach, we have a wealth of money available, but quite honestly, very often, it's not the best way spent on remediating and having a long-term organized security strategy. We also deal with an asymmetric information on cybersecurity status. So investors, owners of the company, who are not sufficiently informed, who do not have all the data available that they need in order to take decisions with regard to budgets and security and the risk appetite of the company. And then there's always the discussion about the board acumen around cyber. How much does a board really need to know about cybersecurity? Do they need to become experts around it, or is that really one of their core tasks? And is there not a different solution that we can use in order to make cybersecurity transparent to them? Now, what do we need to do? What is our overall objective that we have? So one is that our first priority should be to look at the information assets that we have in the company that we are supposed to protect in information security, and link these with the expected risks and opportunities, of course, that we have in the company, and determine the company's risk appetite. So once we know where our money in the company is, where the business is, then we can calculate important ratios based on that equity to risk ratio for the risk appetite, or, for example, the beta in the capital asset pricing model. So these are already ratios that are much more accessible to a board. Then, of course, everything that we do in security is, of course, correct, right? We're not doing it, we're not reinventing the wheel. We are having really a good best practices out there. There's NIST 2.0 just coming out, an updated ISO 27001 version a couple of years ago. And now what we need to do is that we right now have maybe maturity levels around it, but we would need to link these to monetary values in order to make transparent how good we really are in complying with these standards. And last but not least, I mentioned it earlier, there's an increasing pressure regarding the compliance requirements that are set out by the SEC in the US, but also the European Securities and Markets Authority in Europe, which is asking for financial data around cybersecurity to be reported in order to reduce this asymmetry in information to our stakeholders. So there's a gap that we need to fill. What has been done so far is that there are very good approaches out there. One of them is, for example, Infonomics by Douglas Laney, who created or assembled methodologies around how we can monetize data, how can we evaluate it, how can we value it, and however, his approaches do not really focus on security. So he's focusing on the value side of it, but it's missing what we can do in security in order to work with this valuation of data. His approaches, you will find them also later on in the definition, would be, for example, the economic value, the monetary value for how much can you sell data on the market, how comprehensive is it, etc. So that would be part of a classical data science project that many companies already have today. Then, of course, we have the risk-based approaches. So there's this, I at least saw it also last year on the RSA conference, the very good book by Hubbard and Sison, How to Measure Anything in Cybersecurity, which is taking a Monte Carlo approach in order to calculate risks in the future. There's, of course, also Freud and Jones FAIR, the factor analysis for information risk, that we can look at. So these are two very good approaches in order to calculate risk. The limitations by it, or by them, are, first of all, it's pure risk management, so it's really oriented to looking into the glass ball and trying to be as precise as possible actually in predicting what is going to happen in security. And the second is that, in particular, the second one also, it's very tough for smaller companies. So these frameworks are really very good for large companies to use. Smaller companies rather tend to struggle. And then we have the third one, which is Skinner. She wrote a very good article on the SEC reporting, on what companies should do in order to report around cybersecurity. And so she creates three categories: substantive, preventive, organizational. What she misses is giving a concrete example on how you can actually report, what's the methodology behind it in order to get to these numbers. So that's the situation that we're in. And let's take a look at some costs that we have. And this is not an exclusive list, but I would say it's probably covering most situations that we have in security today. So we have the technical investigation cost after an incident. Anything that has to do with digital forensics, and very often connected to this, customer breach notifications that we need to pay for. So this is, communications department needs to take care of it, potentially a crisis management team. Then we have post-breach customer protection. In particular, if you have personal data involved, you will probably need to keep a certain amount of assets, of costs, dollars aside, in order to have your customers covered over the coming year after a breach. Then we have the cyber remediation and program improvements. So right after, of course, we, for example, need to get either our own people, sometimes back from vacation. We need to hire external consultants in order to remediate the attack and what's left, and also to improve, of course, our program. Then we have public relations. Very often this is a quite costly factor when we're talking having more communication around security. Research shows in that area that any communication that you do prior to an event will actually pay off in the event and after the event. So you're much more likely to be less penalized after a security event on the stock market, for example, if you proactively communicated around security before. Then we have regulatory compliance and fines. Of course, we all know the famous 4% GDPR fine around on your annual turnover that you need to face. There are attorney fees and litigation that are connected to it, customer class action payouts. We have ransom payouts in case it was a ransomware attack, and you decide to pay. The client claims and increase in insurance premiums. So this is insurance premiums in particular. It's something that becomes painful not only because you will be revisiting your first risk disposition, which will require a new reassessment, but of course also the premiums of the risk will rise. Then what companies very often don't think about is the impact on credit ratings. So a cybersecurity event usually requires for you to take a lot of cash out of your company. So despite the company, for example, having very good facts and figures around your income statement, so you're generally having a positive revenue flow, making profits, but still in that very moment you need to take out all this cash. So that will actually impact your credit ratings and have long-term effects actually also on refinancing, but I will come to that later. We have a stock price decline. It's very often, research also shows, not of a very long-term effect. So very often after 2 weeks, sometimes 3 days, the stock price is back to where it was. There's a very good article around this in the Harvard Business Review, why stock market prices always go back to where they were before. There's a problem around valuing it, but I guess we might be able to overcome it with using this methodology. But still, you will need to face the stock price decline for short term. Then there's an increased cost to raise debt, like I mentioned earlier, on the impact of credit ratings, and the capital constraints for growth initiatives. So anything that you're in a competition in security regarding other projects that you need to finance. And here we are having or learning on having larger impacts also for other fundings in the company. Then, of course, the impact of operational disruptions. So during what time are you not able to function normally, selling your products, producing your products? So that's your direct impact on your revenue. The loss in sales and in contracts. So what impact does it have on your customers? How many customers will you lose? What is the reputation loss that you have around that? And the additional security audit cost, there's also some research around this, so you're probably losing or having to pay more of around 5 to 10% of your audit fees after a breach. So this is argued by the Big Four that you have to, they have to put additional evidence, do more testings around your security posture, and therefore you need to expect that after a breach your audit premiums will rise. There's of course loss of intellectual property, if that's key to you and your business, if that's not available or rather available to everybody in the world. And it can have an impact on lower M&A valuations. There are good examples of companies that were actually already in an M&A process, and that M&A process actually stopped after an incident occurred. So these are some of the costs, like I said, and it's quite important when you calculate the overall impact that it has on the company. And now our challenge is to organize this. So we ask, how can boards of directors use monetary values for developing, implementing, and controlling cybersecurity strategy, the investments that we do with regard to cybersecurity, and disclosure decisions, ensuring the comprehensiveness and comparability of metrics? So a framework that can be used in any company, but also that can be compared between, or is comparable between companies. So we did our homework before in order to be able to identify the different costs that we have, the monetary values. Have there been any approaches out there that we could use and that we could introduce into our framework that has been done by other smart people before in order to calculate, for example, reputational loss, audit premium, impacts on the stock market price, etc. Everything that I just said before. So what we could first of all see is that there is a high augmentation in the area, so obviously it's been gaining in interest. But there are no real frameworks, but descriptive frameworks on what board of directors do. So what we can tell already today is that in particularly diverse boards, for example, tend to disclose more and be more transparent and open about any cybersecurity issues, but also investments that the company has. There is some input on quantification, particularly in the auditing research. So what I just mentioned before, impacts on audit premiums, but also that companies need to pay more, that auditors need to pay more if they are impacted by, for example, by an incident. These are research, this is research that has been published and that we reused in our model. The second thing is that we looked at what is being published so far. So we went to take the top 100 companies in the US, in the UK, in Germany, and in France, and looked at the annual reports on what they have been publishing around cybersecurity in the annual report. So what do they say about it? We also looked specifically at companies that had a cybersecurity incident and how they dealt with this incident in the report. Now, what we can see is that generally the readability of the cybersecurity sections are poor. They tend to use very long sentences, very complex sentences using technical language. So overall readability scores require what in the scoring system that, for example, this Flash Reading Index has at least 10 years of formal education in order to be able to read the report. So in short, companies make it very difficult for an outsider to understand cybersecurity. Now, the question is, do they want to make it difficult, or is it just simply not there? So now the solution. So what about using international accounting language in order to present cybersecurity to the board. So a language that boards are used to, they're using on a day-to-day basis. Furthermore, these accounting positions are already embedded in every enterprise resource planning system that you have in your company. And then we're looking at 3 use cases. One is incident quantification, so after a cyber incident, what happens? Second, investment strategies, so how can we optimize investments? And 3, and that is becoming more and more important for the companies overall, but particularly also for boards, because very often they're incentivized on it, it's the ESG reporting, right? And security enters into normally the G, the governance part of it, and so how you can actually, what do you disclose around cybersecurity? So now these 3 use cases, I'm not going to go through them in all the detail, but the important message here around the 3 of them, so the first one is the LUSI Offline Society in Switzerland. The second is the super profit yielding company that is optimizing their security investment. And the third is the Blue Earth Sustainable Trading Company, so that's the use case on ESG. So these 3 use cases, they are based on cases of a couple of companies that we used who tested these cases. One is a medium-sized manufacturer of medical products in Germany. The second one is an IT service company in Switzerland for financial service, in the financial services sector. So all these elements here are now important to be found in these financial statements, the set of financial statements that I would like to present to you. And going back to our diverse costs that we have around cybersecurity, we can organize these as such that we have certain costs that particularly are relevant under the use case 1, some that are important for investment strategies, and others are for ESG reporting. And now these can be organized in the following statements that we have. There's always a 3 set of statements. There's the balance sheet, the income statement, and the cash flow statement. And now let's take a look at the actual model. And I would like to switch. Thank you. So what you can see here is a file that has been developed having the instructions that are that will help you understand how the model works and how to use it. There are also the use case definitions of the 3 use cases that I just mentioned. Then here we start with the 3 sets of statements. So here's the balance sheet that has on the left side the assets. So how do you calculate information value, the economic value, monetary value? But then you also have liabilities. I don't want to go, so the colors relate to the use cases that I just mentioned. What is one thing or one gap that one position that I want to highlight is the equity here, which essentially gives you insight into the risk appetite. So calculating all the losses that you have in the income statement, the expenditures that you have after an incident, compared to the equity that you have in the company, then gives you the capital at risk that you have. From there, you can calculate your value at risk that you have, and the board can say, okay, yes, we do agree with this amount of risk that we have inside the company, or we don't. The second statement is the income statement. What we have here is all revenues. It might also be, for example, insurance coverage that comes in after an incident. That will be an income to the company that you can see here. But most importantly, probably look at the expenses that you have inside the company. So these are all the costs that I just gave you before after an incident for the attorney, but also salaries for internal employees, external employees, insurance payouts, etc. at receive. Now, in this statement, you have all categories that are required by the SEC. So everything that the SEC is asking for in their latest publication on cybersecurity disclosure can be read through this statement. And then last statement is the cash flow statement, where you can actually follow, okay, so how much cash do we still have in order to be able to keep our credit ratings. This is what is probably used most, or you can use most. This is at least what our cases showed in negotiations with your banks afterwards, to give them an idea, okay, well, what is the financial stability of the company? In the back of the document, you have all the definitions, so each position is defined and how you calculate it. And the last one is the matching of the standards. It's ISO 27001 and NIST 2.0, and how these feed into these statements. So if I have a control, for example, around security awareness, how does this translate, for example, in wages, salaries, trainings that I provide to my employees? So what we should do next is identify the use case that you want to make inside your company. So what message do you want to transport? Is it something, an aftermath of an incident? So how much did we actually lose around cybersecurity in a specific situation? How much did it accumulate, potentially also over a year? So I didn't mention it in the model. There's also the forecast, right? So you can also use your risk management, your predictions actually in the model to say, okay, well, what do we expect until the end of the year to happen, right? And so yeah, is it the cybersecurity incident that you want to, where you want to build a case around? Is it that you want to optimize investments to show, okay, well, right now we are under investing compared to the risk appetite that we have in the company, right? Or we are potentially over-investing in it. Do we have like a case to make around ESG reporting? Is there something where I can get board support because we are supporting them in their goals, in their objectives? Then in the first 3 months, very important to discuss and receive the endorsement of the use case from top management in order to go ahead, because you will need to talk to finance. They are the ones that have this data ready in their systems, and they need to extract the data from the enterprise ERP systems to organize it in this financial statement logic. Usually, as the data is already there, it does not take much. It's just a matter of reorganizing this in this set of financial statements that I just showed to you. And then within the 6 months, you should set up regular queries to validate the data and extract relevant metrics, so to see how does it develop. Are we potentially missing anything in the data that is not potentially in the systems yet that we need to still leverage? There's obviously several levels that you can have and granularity that you can work on. So for example, organize it by regions, organize it by products. So how much do we pay in the US? How much do we pay in France, etc. And then have a first presentation to the board using that financial logic. So it's something that boards are usually used to read, but it will be a new method. The key is to reuse it over time. So if you're only presenting it once, it will probably not have such an effect. If you're using it over the years in your reporting, then they will get first of use to it, but also see the developments they have in it, and then potentially can also relate to other companies having it. Now, the conclusion here is that we have stakeholders that see a gap in cybersecurity reporting. So there is standards and practices to report on cybersecurity that are not visible to them or not understandable to them, and that they want to know more about. The study that was demonstrated that monetary values can be developed in multiple sectors, various industries, and internationally. So there's this comparability that you can actually use from different from SMEs to larger companies, from financial service sector to IT to manufacturer. So these are cases that have been made, and then there is a public version of the set of statements available through EM Strasbourg, so École de Management Strasbourg, or the Center for Long-Term Cybersecurity at UC Berkeley, that you can simply download from there, using it, adapting it, so you are free to use it in your specific accounting standards. So the financial statements are built on IFRS principles, International Financial Standards for accounting. But if you're using something, for example, in Switzerland, the company used a different standard, they adapted it to their means. For example, meaning that amortization, so one of the positions is the amortization of IT infrastructure. They would not do this over several years. They would do it in the first year that they would buy the infrastructure. So these are minor adjustments that you're free to make. The model itself is common license, so you're free to use it. Simply don't sell it. Yes, and I think that is my presentation, and now I'm very much looking forward to your questions. Yes. Yes, I'm not sure if I can go back. Well, anyhow, if you put in now on the presentation, doesn't matter. If you go on, if you search Quantisec or Center for Long-Term Cybersecurity, Berkeley, and Quantisec model, you find it on the website for download.
So yes. It wasn't very clear to me on how were you quantifying the information assets?
Okay, quantifying the information assets is the methodology that is commonly accepted also now for international standards, actually. So you have essentially 6 methods that there are. One is the monetary quantification, so this is the market value for how much you can sell the data on the market. So this is done many times already today. For example, if you do a search and your browser gives you advertisements, so this is the market that's out there where you can actually look up, okay, well, how much is this set of data worth? That's one thing. The other is the economic value of it, so how much do I need to pay? So what are the costs in gathering that data? Do I, for example, need to rent it as a software as a service? Is it data that I develop myself? So what are the costs around it? And then how much do I spend in upscaling that data? So for example, big data analysis solutions, or so I make out of raw data something more valuable. And then for what do I do in order to sell it? So that's the economic value of it. And then the third one is the mere cost approach that I was just mentioning. So how much do I lose in case the data is not available anymore? Revenue loss that you have. Thank you. Yes.
Would you share a story of an organization where the CISO didn't have much in terms of a security budget, then used a methodology like this to present, a justification for greater funding and then a positive outcome?
Yes. I think the problem behind it, thank you, that's actually a very good question, is that very often management doesn't have transparency on the actual costs, so they do not know what is all related to a specific incident. So they have problems in getting a grasp on the actual expenditures. So organizing it in the way that I just did, by saying, okay, well, see, we had to pay our internal personnel off time from the vacation. We needed to hire so many consultants externally. We had to, like, all the costs that I just showed to you. It actually creates much more transparency on the long-term effects that the incident has, and also what the impact on the business is. So how much revenue loss did we have? Yeah.
Yeah, so, I mean, just to add, what we're trying to do is request the funding prior to there being a major incident. So, you know, that's what we're looking for an example of. At post-incident, we can, you know, obviously the money is there, and the justification and data is there in terms of the cost. But pre-incident is when we really need to be able to justify greater spending.
Okay. So what you have in the model is, for example, is the insurance coverage that you have. So it's the estimate of what your estimated loss might be. We have things like any credit ratings that are currently available. We have also the risk appetite that we have, so our expenditures on security regarding the risk appetite, and potentially to demonstrate, okay, well, our risk appetite is there, but our spending is here. And so there's a gap between what we are currently spending and what we would be experiencing in case of a loss. And that is probably the most powerful ratio that you can actually use in order to get it right. And companies that then say, okay, well, we have a risk appetite of 80% because the expenditure for security is really low, they will find out themselves that something is not correct there, right? So it will become visualized to them what is not sufficiently budgeted in the system right now, and that they are lacking behind, and particularly ratings. Yeah.
So piggybacking upon quantification question, the model that you have, is there an ability to view that in various different format, like the FAIR model or things like that, or is it very, very proprietary to what you are building it up? That's one part of the question. And the second part of the question is, are there any tools available out there beyond this? You know, Excel is great, but at the same time, be able to create those surveys, get those inputs on a regular basis, to have that more current, get in more information about, let's say, if you have a maturity model discussion around NIST CSF or whatever that case may be. The two-part question is about, you know, can it do that? And then the other one is any examples of the tools that might be helpful for these purposes. That would be great if you could comment on that.
Thank you. So the tools is something that you can use any ERP tool essentially. So this data is available, for example, in SAP. So I didn't put it out there because I'm not paid by anybody of them, but any enterprise resource planning tool will have how much you're paying for insurance, how much you're paying for salaries, etc. So you can, once you have the Excel file and you just match it with your own system, you can reuse it. And sorry, I now got lost on the first one, which was?
The first one was about the different model, like FAIR.
Oh, yeah. Yes. And like I said, like I said, a little too late, but when you look at the model, there is the past view. So what have we been paying out already? Then, of course, there are what in financial terms you call liabilities. So this is what we are already agreed to and that we will still need to pay out in the near future. And then there is the forecast. And the forecast is exactly where you're using all the risk-based models that you already have in place. So you can just reuse them. Any company can use their own model, and if it's only, you know, impact times probability or something more sophisticated, like you were talking about FAIR, which is already very high standard. But if you're, you can use that in that forecasting element in order to show what we are expecting in terms of payouts in the near future or for the next years to come.
I wanted your thoughts on how to develop or quantify reputational damage.
Yeah, reputational damage is always a very good one. So there are some companies that are simply using customer churn rates, for example. I went a little further, and one analysis that we did is after an incident. So Deloitte had an incident in 2017 affecting US customers. Now what we looked at is how much could they charge, and the incident was actually published not by them but by The Guardian in the UK. What we did is looking at how their audit fees changed after the incident, but not on the customers that were affected, but by customers that were not affected actually by the incident. And there we could see over the following 2 years that they had an increase of 5%. So they a loss in audit fees that they could charge to their customers of 5%, and compared to the other 3 big 4, so to take out any variations of currencies, etc. So that would be another possibility to quantify that loss. If you're inside the company, it will probably would gain more transparency about how our clients argue around cybersecurity or this incident, and how much you have to pay them sort of back in compensation around it.
In terms of the best pathway within an organization to get this study of information kind of brought together, who's best equipped organizationally to drive it, have you found that that's been within the cyber area of the business, or more driven out of the financial side? Because it's my experience in like 25 years of being in cyber in companies is that for the most part the cyber folks don't have access to it, or have a difficult time either getting the relationships with the finance people, being able to drill into what they need, get what they need, articulate what they need. It seems to be a tough road to travel. So for those companies that have been successful with the approach that you outlined here, how did they get there?
Very good, very important question. One of the last recommendations I made is that you need to get finance into the boat if you want to drive it. Then there's a third one that you need to have. It's anything that is working with data science. So in order to get the information value, it is actually best if you have a sponsor on the board that is probably coming from finance, or on the COO side it works as well, but finance is much more equipped actually into bringing in the data and you sort of supporting it. So that is just simply who owns the data so far. At the same time, you from a cybersecurity side, you are the ones that have the need, right, in order to get the budgets. So you would probably take a vital interest, like the steering committee being under the CFO, but then having you as a project manager on it. So that's.
Thank you very much. This is excellent.
Yes.
Hi, my name is Mustafa. I'm from Mitsui Sumitomo, it's an insurance group. So I see that you presented a really good way to quantify the risk and how much you can ask the board. I never see this being used as part of the CSIRT. So we do CSIRT every year, and we're like, okay, this is the incident. And it just ends up at, okay, everything is back to normal. But I think to validate that gentleman's point, that how do we, because we never had an incident, but we talk about incident every year. So I think the next step could be a follow-up meeting saying that, okay, let's work on, if we go to the incident, we pay ransomware or something like that, what can we do? And then involve the board in that, to show them what could be the end result of an incident. So I think that could be helpful too. But I don't see anybody doing that.
Yeah, I guess it would be a part of a simulation
Right.
that you could run. Okay, so what is taking a Ponemon study or something? So what would happen if we have to pay what are we now, 4.8 on average ransom payout?
Right.
And how are we equipped for this, right?
Right.
Yeah.
Well, I mean, it's great. You built built the methodology for finance. Finance doesn't have anything like this. So if we're like cyber practitioners, CISOs are going to be able to maybe sell this to finance and say, hey guys, we need your help to fund better cyber infrastructure. Here's a here's a tool that we're going to be
Yeah,
able to give
yeah.
them to help us.
Yeah.
So I mean, this is great because it gives us a tool to arm finance. Instead of just telling finance, help us, we're actually going to give them a tool, which is great. So thank you.
Yeah, thank you. Thank you very
Thank
much.
you.